XLM's defining moment at 28 cents. This is the kind of moment that separates real investors from speculative tourists. XLM Stellar's native token isn't just idling at a random number, is clinging to the edge of a battlefield that's been months in the making. We're at the 28 cents. Not by chance, but because this is where the entire market's conviction is getting stress tested. In real time, let's talk numbers first. As of today, May 24th, XLM is trading just a hair below 29 precisely, around 0.28998. Daily chart slightly red intraday, high of $4,402. Intraday low scraping near $0.285462. That might sound like normal volatility, but context is everything. Zoom out to the 4-hour or even daily time frame, and what you see isn't just noise, it's coiled compression, a tightening range with 30 cents acting like a cement ceiling, and 27 cents quietly defending itself like a veteran soldier on the front lines. And make no mistake, this range matters. This isn't some random sideways chop. This is the inflection point between a bullish breakout and a bearish rejection, between accumulation and capitulation, between the smart money loading up and the latecomers panic selling into weakness. See, 27 cents to 30 cents isn't just a price band, is a psychological war zone. Bulls see it as a launch pad, bears see it as quicksand. And right now, with Bitcoin refusing to lead and Ethereum stalling in midair, altcoins like XLM are on their own. No cavalry, no tailwind, just raw conviction versus cold liquidity. Here's what makes this even more high stakes. Stellar actually tried to break out just last week. XLM made a run at 31. It got smacked down fast, like someone hit the brakes on a highway. That rejection wasn't just resistance, it was a sign that short-term traders are lurking, eager to scalp, quick to bail. And with broader altcoin sentiment on edge due to increased liquidations, it's not exactly a confidence booster. But here's where it gets interesting. Despite the rejection, XLM didn't fully roll over, is still hanging tight, still consolidating near support. And that tells us something. There's quiet demand here. There's someone accumulating at these levels while the headlines stay distracted with meme tokens and BTC's fake outs. If this 28 cent support level holds, we could see a serious bounce, not just a relief rally, but a setup that triggers a measured move back to 35 cents and beyond. But if it cracks, if we get that decisive breakdown below 27 cents with volume, is a fast trip to 23 cents. No questions asked. And from there, the real question becomes, how deep is the conviction among Stellar's long-term holders? So what's really happening here? To understand that, we've got to go beyond the price chart. We need to look at 5 key angles: volume, profile, market sentiment, institutional wallets, DeFi and ramp activity, and on-chain developer momentum. Because this moment is bigger than a chart. It's about what Stellar is actually building beneath the surface. But before we dive in, if you're here for signal over noise, for research over hype, then hit that subscribe button. Now you won't want to miss what's next for XLM and the silent shift already underway in the broader crypto landscape. The 28 cents pressure point. Why this level is so critical. This isn't just another technical level. It's the line that's defining Stellar's trend right now. Forget hype. 28 is where the market decides whether XLM breaks higher or rolls over. Earlier this week, XLM nearly hit 0.297. It looked like a breakout, but the rally reversed fast. Within hours, price dropped to 0.276. Late buyers got caught in a bull trap. Meanwhile, traders who shorted near resistance walked away with gains that failed breakout and quick reversal, exposed how fragile sentiment still is. And that's what puts 28 cents in the spotlight. It's the level holding up repeated tests from below, and it's where real demand has quietly shown up. The daily Bollinger Bands are tightening. That squeeze suggests volatility is brewing. The midline of the bands around 0.287 is now acting as short-term resistance. This is where bulls and bears are battling for directional control. Add in the fact that the 50-day simple moving average also sits near that 0.287 zone, and you've got a clear confluence momentum. Indicators and trend following tools are all pointing to this one area as a pivot. When price and indicators cluster like this, it's not random. It's a signal that something bigger is brewing. Zooming in, Fibonacci retracement levels give more insight from the recent swing low to the 0.297 high. The 61.8% retracement sits at 0.2794. That level has been tested twice in the past 2 days and held both times not by chance. That's the kind of support that hints at smart money accumulating, building quietly as retail traders hesitate or exit. So what now if 28 cents continues to hold as support? There's room for XLM to push toward 31 to 32 cents a V. Cents if volume steps in, that could extend toward 35 cents or even 36. But if 28 cents cracks and the market can't defend 27 cents immediately after the next rail liquidity pocket sits closer to 23 cents, that's where buyers may finally step back in. But it won't be painless on the way down. These are not random guesses. These are areas where liquidity pools sit, zones where large buy and sell orders are placed. When price enters these zones at speed, it doesn't drift. It surges either up or down until it finds enough volume to slow it down. In short, 28 cents isn't just a level, it's the tipping point. We're in a moment where stellar structure is tightening, its indicators are aligning, and the market is coiling for a decision price. Action has narrowed, volatility is loading, and momentum will break one way or the other. Soon traders who understand the importance of this level aren't just watching, they're preparing up next. We look at volume and whether institutions are actually stepping in or if retail is quietly exiting the stage, because price can fake you out. Volume doesn't. You can analyze every chart, draw every line, and map every resistance zone, but none of it matters if the broader market is in panic mode. And right now the market isn't calm. It's coiled, twitchy, and one unexpected move away from unraveling. That's the environment XLM finds itself in. Start with this. Over 669 million in liquidations were recorded across the crypto market recently. Of that, $465 million came from long positions. That number matters. It shows just how much hope was baked into recent rallies and how quickly that hope got obliterated. Traders bet on breakouts. Momentum didn't follow through and their positions were wiped out. This wasn't a slow bleed. It was a reset, a forced flush of leveraged optimism. XLM didn't escape the damage, it never does. In these situations, liquidation data shows that the bulk of XLM's long liquidations triggered when the price pushed above 31. That's not just a coincidence, it's the moment bulls overcommit. They saw what looked like a breakout forming, rushed in with size, and paid the price. When the breakout failed, that rejection created a pocket of trapped traders, holders now underwater, hesitant to re-enter unless XLM shows real strength. But here's the real issue. Stellar doesn't move in isolation. Bitcoin still dictates the mood of this market, and BTC has been caught in a no man's land between $68,000 and $70,000 with fakeouts in both directions. That's a dangerous setup for altcoins. Every Bitcoin shakeout creates a ripple effect. A sharp 2% dip in BTC often leads to exaggerated 5 to 10% drops in mid-cap altcoins like XLM. When Bitcoin wobbles, everything downstream gets hit harder and there's more pressure under the surface. Liquidity for XLM has thin trading volume, has trended down over the last 2 weeks. It's not just lower, it's drying up. The thinner the order book, the more violent. Every price move becomes a few large orders, whether from institutions or aggressive traders, can swing price in either direction without much resistance. That's a recipe for whiplash. It's in this kind of low liquidity, high uncertainty environment that smart traders sit out while aggressive ones take control. Retail investors trying to hold spot positions are at a disadvantage here. Whales and scalpers love this zone. They thrive in it. Fast price movements, unpredictable swings, and weak conviction from both bulls and bears means easy exploitation for those who can move size quickly. And yet this isn't the time to throw out fundamentals. While the technicals have tightened and the market sentiment is strained, we haven't seen capitulation yet. In fact, volume around the 28 cents region suggests some accumulation is happening, even if quietly, but without a significant uptick in daily trading volume, especially during green days. It's hard to say the bulls have real control. This is where patience matters. It's not just about watching support and resistance anymore. is about watching participation. If XLM can reclaim the 30 cents level with strong volume that surpasses its 20-day average and shows sustained interest, that's when the tide starts to turn. Otherwise, every push higher risks becoming just another bull trap. Volatility is the wild card here. It's not just about price, it's about confidence, and right now both are in a fragile state. Hidden whale activity, what the on-chain data reveals while retail traders panic over every candle. The smart money is moving differently, quietly, strategically. And if you know where to look, the on-chain data tells a completely different story than what you see on price charts. Let's start with the basics. Address activity on the Stellar network has been unusually stable. Despite price volatility, that alone should raise eyebrows normally. When price wobbles, retail wallets either panic, sell, or disappear. But in this case, we're seeing the opposite. Wallets holding between 1 million and 10 million XLM have increased their holdings by roughly 5%. In the last 3 weeks, that's not a fluke. That's targeted. Accumulation, even more, telling many of these addresses haven't moved. Funds in months until now, they're waking up, consolidating and either moving tokens into cold storage or positioning them across centralized exchanges in low-volume batches. This is behavior you typically see before a major move. Not after one, it's the same pattern we've seen before. Other key XLM rallies. Accumulation, silence breakout. These wallets aren't chasing candles. They're building positions when others are distracted by short-term fear. Let's talk clustering analysts. Using heat maps of XLM's transactional flows, have identified wallet clusters, likely institutions or crypto funds that have been quietly absorbing supply between 0.265 and 0.285. The activity isn't random. These clusters appear to be coordinating around major support zones, suggesting that these entities believe 28 is more than just a line on a chart. It's a floor for future upside. This theory is supported by liquidity pool movement. On-chain LP data shows a notable uptick in liquidity being locked into XLM pairs on decentralized exchanges and bridge protocols tied to Stellar. Why would whales bother providing liquidity, exposing themselves to impermanent loss if they didn't expect upward price movement? The only reason is conviction, long-term conviction, and it doesn't stop there. We're also seeing stable coin flow into Stellar-based protocols rising. USDC and EURC issuance on the Stellar chain has ticked up over 8% in the last month. That's fresh capital coming in, not rotating from within. When stablecoins move onto a chain in size, it typically precedes one of two things: either major protocol level activity or a large buyer preparing to deploy. So while the charts may look indecisive to most traders, whales are treating this moment as opportunity. They're not scared off by volatility. They're using it to accumulate size without moving the market too aggressively. In the silence, that's intentional. You won't see these entities tweeting. You won't see the moves hyped up by influencers because smart money never announces their plays in real time. They accumulate in the shadows and let retail chase the breakout once the headlines catch up. The takeaway here is simple. When on-chain metrics and exchange order books tell two different stories. Trust the chain, it doesn't lie. This is shaping up to be a classic stealth phase. The longer we coil between 27 cents and 30 cents, the more tension builds. And based on the on-chain movement we're seeing now, that tension isn't going unnoticed by the ones who matter most. Price forecast, where does XLM go from here? Now that we've broken down the technicals and the fundamentals, let's map out what comes next. Scenario 1, bullish reversal. If 28 cents holds and volume re-enters the market, we could see a surge toward 32 cents quickly. That would flip the 50-day SMA and Bollinger midline from resistance to support next targets. 36 cents psychological round number, 42 cents 2000, 23 highs, 50 cents major long-term resistance in fib extension scenario 2. Bearish breakdown if 28 cents breaks cleanly and 27 cents doesn't hold, we could see a free fall to 23 cents. That level served as major support back in Q1 2024. A fall to 23 cents wouldn't mean Stellar is dead, but it would reset the trend and shake out short-term holders. On-chain indicators, wallet growth is stable, but new addresses are slowing. Developer activity is steady, no massive drop-offs. Active DX volume on Sorbonne is climbing. albeit modestly, all these support the idea that structurally XLM remains sound even if price doesn't reflect it today. You've probably heard the saying, maximum opportunity hides in maximum fear. That phrase is ringing loud right now with Stellar XLM sitting right at this 28 cents crossroads. This isn't just another support level on a chart. It's a psychological battleground where traders, investors, and institutions alike are weighing risk and reward like never before. Why 28 cents matters emotionally, support levels like 28 cents are more than just technical lines, they're emotional lines in the sand. When price approaches them, the crowd's mood can flip in an instant. If 28 cents holds firm, it sends a clear message. The market is confident, buyers step in, shorts cover, and momentum builds for a rally. But if 28 cents cracks under selling pressure, it triggers fear, stop losses cascade, retail traders panic sell, and what was a minor dip can spiral into a deeper slide. The thing is, the 28 cents level has become a symbolic test of Stellar's resilience. It's where cautious investors ask themselves, is this a buying opportunity or the start of a painful decline? The answer here will shape the narrative for weeks to come. Institutional accumulation, is it real? When we zoom out and track wallet activity, something interesting emerges. Large wallets, the kind associated with institutions or crypto whales, are quietly accumulating XLM between 27 cents and 29. This is no retail FOMO frenzy, it's calculate.